was Ephesians 4:15. I was thinking about it as I was reading and going through my notes and preparing. Ephesians 4:15. It says, rather, now this is the Amplified Version I'm reading. Rather, let our lives lovingly express truth in all things, speaking truly, dealing truly, and living truly. And folded in love, let us grow up in every way and in all things into Him who is the head, Christ. That was Ephesians 4:15. Read that out of the Amplified Bible. That's the 1954 version of the Amplified Bible. I love how it says it. Rather, let our lives lovingly express truth in all things, speaking truly, dealing truly, living truly. And that is not what is happening with our friends in the media. I mean, I don't even know where to begin with the stuff that I'm hearing. And it's easy to say, oh, it's the liberal left and their slanted agenda, but it's just beyond that. It's just blatant lying. Once again, and now this is an email that I received from Stuart Goldstein. Let me give him credit. He writes about a lot of things, writes a lot about our law, our government. Once again, we see that truth is not a value of the left. Sure, we see distortions from the right as well, but from time to time, not as much as from the left. The drumbeat of false information from once trusted sources is almost overwhelming. And because the mainstream media is on the left, they amplify the lies of people like Nancy Pelosi and Chuck Schumer rather than calling them out for what they are. And what they are is liars. Calling them out for lies on the new tax plan. Is the plan perfect? No, it's not perfect. But you know, waiting for a perfect tax plan, we'd all be sitting around here with no tax plan. There is no perfect tax plan. We're a country of 300 plus, I don't even know how many people do we have now. 320 million people? 320 million people. Everybody has an interest. You can break groups down into subgroups and groups, and I've heard this tax plan, this is me talking now, this isn't Stuart's quote. I've heard this tax plan, I heard a union spokesman calling this tax plan anti-union. I heard a corporate person calling it anti-corporate, a charity person calling it anti-charity. Whatever your angle is, you can pitch it and you can spin it. But what is the truth? What is the truth? Let's speak truly, deal truly, and live truly. So Nancy Pelosi actually called this tax plan a Frankenstein of a tax plan and said it was Armageddon for the nation. Nancy, please read Revelations. That's the real Armageddon. And that's a serious thing. For you to say that is not even, it's not honest. And that's the worst part. An Armageddon for the nation. And the other politician who said that 100,000 people are going to die because of this tax plan. 100,000 people are going to die because of this tax plan. Okay, so there was now Stuart goes on to say, you remember there was a phrase years ago, a man hears what he wants to hear and disregards the rest. And that's really what you've got here. It's CNN's nonstop. They're making it seem the big thing they're promoting, because of course they're bleeding heart liberals and they're the champion of the poor, even though none of them are poor. There isn't a poor news reporter. There isn't a poor person in the media, except maybe, you know, people that actually do the work. But as far as the upper executives and the news reporters and all the people you see on television, not one of them's poor, folks. Most of them make six-digit incomes, mid-six-digit incomes. I mean, these people are very wealthy. But they're going to tell you how to live your life because they know about your life. So it goes on. It goes on. Washington Post, New York Times, they just all of them are attacking it. Even though they say this is bad for the poor, even though most poor and middle class people, because of tax credits and tax breaks, pay no federal tax. I've talked about that on the show before. They pay no federal tax. Their incomes go down to zero after standard deduction and exemptions, and then with tax credits and the money they've had withheld, most of them get a refund, and a pretty big refund. Okay? The long overdue tax reform had a lot of major things in it. It brought the corporate income tax rate from 35% down to 21%. Apple yesterday, I've talked about this on my program before, why we wanted the corporate interest rate, the corporate tax rate to come down, because corporations, American corporations, have trillions of dollars sitting overseas where the tax rate is between 15 and 20, 21%. And they're not going to bring that money here. They're not going to pay 35% tax on their money here when they have it overseas and all they're paying is 15 or 20 or 18 or 21%. I mean, that's just common business sense. I don't care how pro-American you are, if you're working on an 8% bottom line at the end of the year and you made 8%, you did good, your stockholders are happy, you're not going to bring it back here and give 15, 16, 20% of it more to the government. That's just, the shareholders would be furious if you did that. So the money's kept over there. So the fight for years, the argument for years has been, let's get this tax rate down. These companies will bring that money back over here. They'll invest it in things. And liberals said, no, that won't happen. They'll just keep it. They'll keep that money. They won't reinvest it. Apple yesterday announced they are bringing hundreds of millions of dollars back into the United States, and they're going to invest it into this country. I read several stories, but I believe they were talking about 400 million they're going to bring back, and that's just Apple. We were seeing other companies coming back. We're seeing unemployment at an all-time low. In December, there were 195,000 real jobs created in manufacturing, not just seasonal jobs. Federal government has cut 16,000 jobs, which is good, by the way. We need a smaller federal government. 16,000 down, 195 up. Unemployment among African Americans is the lowest it has ever been. And it's not just that it's low. It's not just that now that they're all working or more are working. It's that they're now also working in higher paying jobs, higher skill set jobs, because these higher skill set jobs are there for them now, because we have the best economy we've had since the 80s. Where is that in the front page of the media? No, it's not. I mean, I just heard crickets when I asked that comment, Todd. So, I told Todd I wasn't sure what I was going to talk about. I had pages of notes, but I'm sure I would find something to talk about. A man hears what he wants to hear. Now, and I'm going to finish up with this. I've said it the last couple of weeks. Those of us in the preparer community, you know, CPAs, EAs, enrolled agents, we have been crunching numbers with this new tax law to see what it really is. I was at a class, a continuing education class, and a man, the instructor, had rolled out a spreadsheet that had thousands and thousands of combinations. And on average, this new tax law gave people around a $2,000 larger refund, or if they didn't get a refund and they owed an average of $1,800 to $2,100 less. He rolled out, and these spreadsheets can crunch millions of numbers at one time, instantaneously. You change one variable, and it just rolls it on down the spreadsheet. So he was thousands and thousands of scenarios. What I call a scenario is you have a person filing single with zero dependents. making $50,000. That's one scenario. Then you can say, okay, that same person that's single with zero dependents can now have one dependent, two dependent, three dependent, four dependent, all the way up to, I think he capped it at 6 dependents. And you have single. Then you have married filing jointly. Then you have married filing separately. Now, when you have married filing separately, you have the husband and the wife each filing a return. Then you have head of household. Head of household with 1 dependent, 2 dependents, 3. Actually, you can have head of household with 0 dependents, but that's very rare, but you have it. 1 dependent, 2 dependent, 3 dependent, all the way up to 6 dependents. And then he started them making the first amount that you file a tax return is at $15,000. Okay, $15,000, $20,000, $25,000, $35,000, $45,000, all the way up to $1 million. And just rolled these scenarios out. And in every one of them, this tax bill was better. Now, when you got up to the higher ends, people that are making a lot of money, that have no dependents, that are single, with no exemptions, no write-offs, those people were paying a little bit more. So who does the Wall Street Journal choose to prove that the tax bill is flawed, Todd? Who would they choose? Let me answer that question for you. They chose a single person making $1 million a year with 0 dependents and a childless single renter, so they had no house to write off, earning $1 million a year, who's paying $50,000 a year in state and local taxes and claiming $40,000 in charitable deductions. That person is going to have to pay $1,800 more in taxes. That proves that this tax bill is a bad thing. Listen, if I'm making $1 million, I'll gladly pay that $1,800. Okay? Todd's saying, don't get me going. So I went through all that to tell you, please, please don't believe what you're hearing. We're looking at this tax bill, and we think it's a very good thing. Most people, the average person is going to get more money. Let me hit some of the main points of it. Todd, what the time? Do I need to take a break? Let's go ahead and take a quick break. I'm going to come back and I'm going to hit the main points, just the main points of the new tax bill. I'm going to talk about in this new tax bill, there is something called Section 199A. And Section 199A is basically going to give you a 20% reduction on your taxes if you are a small business owner. Now, there are some things in there, and I'm going to show you a way to maximize that 20%. I'm not going to show you, I'm going to discuss ways to maximize that 20%. Some things you can do if you are a small business owner, if you are a sole proprietor, or you are an S Corp doing this. And I'm going to show you some of the downfalls of that. We're going to talk about security, internet security, and your tax return again. And I said last week that I was going to talk about 501c3s. I've had people call me asking me how to start one. Let's go ahead and take a break. This is WCAB 590 AM.
My closet keeps shrinking my clothes. If you have that problem, take them to Nancy at Nancy's Alteration Shop at 610 South Broadway, Forest City. Call Nancy today at 429-6900. Wear the clothes you like to wear. Let Nancy bring them back to life for you. That's Nancy's Alteration Shop, 610 South Broadway, Forest City.
I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. We are back. Gilbert Talks Taxes right here, WCAB 590 AM. I'm Gilbert Carmona. I am an enrolled agent. What gives me the authority to be speaking about taxes, Todd? I'm an enrolled agent. I'm licensed by the IRS to represent taxpayers. You, the listening people out there, I can represent you before the IRS. I have full authority to do that. I can also represent you before the state. If you have a tax problem, if you owe the IRS money, if you just don't know what to do, if you need your tax return prepared by somebody who supposedly knows what they're doing, with this new tax law, I think it's going to be for a couple of months there. I don't think any of us are going to know what we're doing. Now, this is all next year. Everything with the new tax law is next year. But this year, we do have some changes, but they're not as big. We're moving along this year, but everything we're doing now with planning is for next year. If you need me, my telephone number is 828-289-9300. I have an office right here in Rutherfordton, 113 Whitesides Road. I have an office in Tryon, 226 South Trade Street, the beautiful Art Deco building just off the historic downtown in Tryon. Again, my telephone number, 828-289-9300. If you have tax representation, if you need tax representation, you'll get a letter from the IRS. Have that letter handy when you call me. There's some numbers on there that tell me what your problem is. I get calls from people, Todd, they don't even understand. They get a letter from the IRS. What is this letter? What are they trying to say? Sometimes I don't think they know what they're trying to say. But I will try to help you with that. Now, Todd was really having a good time with this during the break, with this person, a single person living in an apartment making $1 million, who had to pay an extra $1,800 in taxes because of this new tax law. And I wondered if this fictitious person even really exists. But then, you know what I thought? Yes, it does exist. And who is that person? A news reporter. That's who does that job. And right out of college, making more money than they've ever seen. I'm going to talk about 501. Let me get into that first. Let me talk about 501c3s, because that's what I said last week. I was going to talk about this week, and if I get going on this other stuff, I'll never get to it. A 501c3 is a not-for-profit organization. I know they call them non-profit. Everybody uses that. Technically, though, the legal way, the right way, is it is a not-for-profit. It is a corporation set up that is not for profit. Okay? Now, a lot of people think that churches have to be 501c3s. They do not. If you are chartered as a church in North Carolina, the IRS does not require you to seek 501c3 status. As a matter of fact, you don't even have to file a tax return if you are a church. Now, everybody does, because they want to be transparent and they want to show accountability, and they want to report these things, especially if you have payroll and you have W-2 staff, that is staff that's getting a paycheck, you're withholding taxes, and everybody files a tax return. That tax return is called a Form 990, a 990 tax return. The 990 tax return comes in 3 or 4 forms. There is a short form. There's actually a postcard, literally a postcard, that a not-for-profit corporation can file if you had less than $50,000 in donations. All it says is we took in $50,000, less than $50,000 in donations. We had very little expenses, or we had these expenses, and we are still a corporation in our state. That is literally all that tax return says, and it's done on a postcard. Or you can e-file it on the IRS's website. I e-file it through my software. You're basically just telling them you're still in business. You're still doing what you're doing. A lot of 501c3s, especially small ones that are really set up more for volunteering, volunteer services, those types will file that 990 short form postcard. And it is literally called a postcard, a 990-N postcard. Then you have the EZ, the short form, and the long form, which the 990 long form is a long form. There's a lot of information on there. A lot of the big charities will file that return. It takes a long time to prepare. It's very complicated. But if you're not taking in that kind of donations, you don't have to worry about it. So for whatever reason, I have incorporated 501c3s for people for everything from an archery club, a yoga club, a lot of churches. I've done it for humane societies or animal shelters. Actually, one of them was for animal fostering. Another one was for an animal shelter. Another one was a business that was going to, all the profits from this business were going to go to the local humane society. It was several women that set up a consignment store. A consignment store's purpose was to sell the products that were consigned to them. Any profit went to the humane society, their local humane society, specifically for animal fostering. Another one of my 501c3s was service training, service animals for military veterans who were diagnosed with traumatic stress, post-stress syndrome, and a service animal for them. And these service animals are highly trained animals. It costs a lot of money, a lot of time to find the right animal and get the right animal trained. That charity was strictly for the purpose of getting donations to get these animals trained, and then place them with veterans that needed them. And I learned a lot in that process. So this charity is doing very well with that. So they wanted to incorporate 501c3 so people could get the tax write-off. Now, the new tax law makes standard deduction up to $24,000, married filing joint, $12,000 for single. So there's been an argument, and that's been in the news also, that this is going to hurt donations to charities. I don't think so. I don't think so. Yes, there are people that donate to charities for the tax write-off, but those kind of people are donating a lot of money. I don't know anybody that's donating, $100 to get that letter, because even with the old rates of $12,000 for itemized deduction, $100 wasn't going to move the needle on that. It was people. I just didn't see that. People weren't doing that. People that wanted a tithe letter or donation letter, a giving letter, were typically people that gave pretty substantial donations: $500, $1,000, $2,000, $10,000, $40,000. That's people where it's part of their tax plan to give this much money away. Most people do it because they're just generous and they want to give. It's a way, for some people they do it because they're grateful for what they have, and they want to share with that what causes they believe in, whatever that cause is. Other people want to create a not-for-profit for the purpose of, like, a club, like the yoga club or the archery club or whatever club, a gun club, whatever club you want to make, bridge club. Now, I didn't incorporate that one, but I did advise them on some things they were going to set up. There's a bridge club that I helped. And the whole reason they set this thing up is dues come in, they wanted it there, and nobody was making any money, and they just wanted accountability for it. And it was a simple thing. So they set that up. But the biggest question I ask people is, why do you want to do this? If you're just doing it because you think it's a way to not pay taxes, you're wrong. There's a lot of rules to setting up a 501c3. One of them is that all the assets that belong to the 501c3 belong to the 501c3. You can't keep them once you close the corporation. Those assets have to be given to another 501c3. So any sizable assets you accumulate in a 501c3, you can't just take them. And that is one of the biggest problems I have seen, especially when you have a church split or you have the corporation close, is the principals, because I don't want to call them owners, because you're not an owner of a 501c3. You're a director or a principal or a member, one of these directors that says, well, that's my camera equipment, I'll just take it. No, you donated it to the 501c3. You probably got a tax write-off because of it, and it belongs to the 501c3. So there's a church split, and they'll take the pipe organ, the chairs, the pews, and half the furniture in the sanctuary, and no, that doesn't belong to you. Now you can donate it to another 501c3. You can give it to another church, or you can start another church and move those assets into that. But that board of directors better approve of that, or you got some explaining to do to the IRS. Now, how do you do a 501c3? The first step is you incorporate, or how do you create a not-for-profit? Because you don't have to be 501c3. There are some other categories. You can be a not-for-profit for political reasons. Now, just know that donations to a not-for-profit for political reasons, for political activists, or for, what is the word I am looking for, Todd? For lobbying. For lobbying purposes, if you're going to lobby politicians to vote for something, that donations to that charity are not tax deductible. So just be aware of that. You cannot solicit that as a tax deductible donation. Okay, so you incorporate. It must be incorporated. It can be an LLC or an Inc., but it must be incorporated in your state. South Carolina and North Carolina both have provisions for not-for-profit incorporation. The filing fee is $60. Do you need an attorney to help you? It all depends. Unless you really are doing a big, complicated corporation, no. You can just fill the paperwork out yourself. And there's plenty of templates online, and you really don't, there's only a few things that have to be in the paperwork. So you fill it out yourself. It's $60. You send it to the North Carolina Secretary of State. You can do it online. In a week or two, you will get back your incorporation papers. You then go to the IRS and you request an EIN number. An EIN number, employer identification number, and you fill out the paperwork to be recognized as a 501c3. There is a filing fee, a very small filing fee to do that with the IRS. There's a form you fill out. Now, it used to be a long process, and the form was very complicated, or it wasn't complicated, it was just long. They asked a lot of questions. Now, they've come up with a streamlined filing process, and you fill out that form. You just streamline the form and send it. I don't know how much the new price is. They did drop it. I want to say it's around $90. I want to say. They actually, this is one of the few times I have seen the IRS reduce a fee. Initially, they had the fee set at 1, and they evaluated it after a few years and realized that it was set too high. They weren't putting that kind of time into it, and they actually reduced the fee, which I thought was great. So I think the fee set at 90, it might be 129. I can't remember, but it's somewhere around there. And there is a publication, irs.gov, where you go, that'll walk you through that whole process. I do quite a few of these, so if you need help with it or if you have questions, please give me a call. It's very viable, and it is a good way to achieve some means or ends, the means to an end. Again, I always ask people, why do you want to do this? If you want to do this because you're thinking you're going to avoid some kind of taxation, no, wrong reason. If you want to do a charity, not-for-profit, volunteer type organization, you're on the right track. And then if you're going to solicit, the last thing I'm going to say about this, we're going to take a break. If you're going to openly solicit donations, you do have to register that with your state. South Carolina has a form you fill out. It's just a form you fill out, and you pay a small fee, annual fee for that. I can't remember. I think it's like $50 in South Carolina. North Carolina, you fill out a form. You send it to them, and you let them know that you're going to be soliciting donations, whether it's through professional fundraisers or through GoFundMe on the internet, or crowdsourcing type of thing on the internet, or you're going to have raffles, drawings, bingo, any kind of thing like that. You need to register that with the state, because that is a commerce thing. So if you got any questions, give me a call on that. My telephone number is 828-289-9300. Todd, let's take a break. Todd just jumped to there. Let's take a break. WCAB 590 AM.
This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300.
We are back right here, WCAB. That was short. I went to get water. I almost didn't make it back. That was short. This is WCAB 590 AM. This is Gilbert Talks Taxes right here, because taxation with representation has not been such a good idea. Those of you listening, Todd got the Blue Room back up and running, www.wcab59.com. Northland Cable Channel subscribers, good morning. Thank you for listening. Thank you for listening, everyone. So, we have, it's official. It is official. We have a filing date, everybody. We have a filing date. The IRS, this just in, hot off the presses, Todd. Actually, they said it Thursday, but it's new to these. I haven't seen it anywhere in the news yet. We have an official filing date. The first day to e-file is January 29th, which is a little late this year. Usually we do it somewhere around the 20th. I think last year it was the 22nd or the 21st. So the first day to e-file, to electronically file, is the 29th, which is a Monday. And now you can go. I know there are places saying we're ready to e-file, you can come now. The software, just about everybody's software was released around the 5th, the 6th. Like mine was released for the software company I use. It was released on Thursday, the 4th. And I downloaded it Friday, got it all up and running. We actually had a trial version before that, but the numbers weren't accurate because we didn't have a tax law. Now we have a tax law. They've programmed it. We're up and running. We're ready to go. Now business tax returns can be e-filed this coming Monday, the 8th. So you can file businesses already. I've already got 2 ready to go that we've done. They close out their year early in December, got me the numbers, we've plugged them in, and we're ready to go. But that's for a business tax return. Okay? Now individuals will be the 29th. Now the people are advertising, oh, you can come in and file your tax return now. Well, yes, you can do that, but you're not going to get your refund any faster. Okay? What they're doing is they're e-filing it, but it's sitting on a server till the IRS opens up their computer to receive those tax returns. Now what we've seen every year is they'll start running some trial returns, so they'll start downloading some from the server, a couple of thousand at a time, running them through the system just to see if there's any bugs in the system, any problems, but you're not going to get your refund any faster. It's just no sense in running out there with half your documents. I see this every year. People come in and they don't have all their documents and they want to file their tax return thinking they're going to get their refund faster. Which brings me to the next topic. The most asked question for the last 3 months has been, will refunds be delayed again? Todd, and the answer is yes. They will be delayed again. And I've been saying it for 3 months. They were very happy last year when they delayed refunds. Now this is delayed refunds for people that have child tax credit and earned income tax credit. What they're doing is they're verifying the security of those tax returns. They are making sure that all the people that are on those tax returns are the right people. So they're going to run them through an extra level of security. They're going to make sure that no other tax returns are claiming them. They've got their little security criteria up, and they're holding tax returns that are suspicious. I haven't heard any hard numbers on how much money they saved, but some agents who are in the know that work in that have said that it's been huge amount of fraud that they were able to stop at the source with these phony tax returns. So they are going to hold them until, and this is law. This is not that somebody decided. This is in the law. Congress put that in there. They're going to hold these tax returns till the middle of February. So the official statement from the IRS is that you can expect tax returns if you have child tax credit, earned income tax credit. You can expect those tax returns to show up around February 27th. Now, could you get them earlier? Yes. Last year they did the same thing, and we had a few started to show up around the 22nd, 23rd, but it was very few, very, very few. And again, they're probably just running some samples through to make sure there were no problems. Most of the people got them in the end of February, and it was like a slam. I mean, I remember people were calling me left and right saying, I got my money, because I told them, let me know, because I wanted to know, because I'm following it, and I don't know, because I don't have access to your bank account. I don't know when you're getting your money, but people were calling me there that last week and saying they were getting it. I don't agree with it. I wish they would do that sooner, but I've said it from my very first program. I said the biggest challenge facing the IRS is not all this stuff about tax laws. The biggest challenge is going to be how they can safeguard your security in this internet age we live in, where anybody can dial into your computer or their computers. Can dial into those computers, and they can have access to major data. You know, we see it with Equifax. How many millions? 140 million? Do we even have a number? And they don't even know it happened. Yahoo's hack, they didn't know it happened until 3 years later when somebody running some security patch found it. Now, conspiracy theorists say that, yeah, they knew and they just didn't tell anybody. But whatever the case, it's a serious problem. It's going to be a serious problem. I'm going to talk a little bit about security while I'm at it. I just got a text. They are listening to us at Railroad Express. And congratulations to Jesse. Jesse was voted Best Rutherford County Coffee House and Best Rutherford County Hamburgers. And I'll tell you, good job, Jesse. I've had those hamburgers. They're good. And I'm going to go on and go over there after this show and get a cup of coffee. If anybody's going to come by, say hi. Say hi to Jesse. Say congratulations to him. He's doing a good job out there. So they're all listening out there. Probably, I'm sure it's standing room only with those awards. Well, that, and he's only got a couple of tables in there. So it's standing room only. What else? Is that the 2 awards you got? That was it?
No, not missing Jesse's head.
Yeah, well, yeah, after that, after getting that award, I'm going to get back to this tax credit, which is major. Have I said major enough today? This is major, this tax credit. Was there anything, did I miss anything on that? Oh, I know, there was something else I wanted to say. Wait, so much information here, Todd. So much information. Okay, so they announced that filing season was going to be Monday, January 29th. I said that. And I told you that tax credits and refunds won't be till the end of February. I said that. The other question everybody wants to know is, what is the last day to file your tax return? This year, the last date is April 17th. April 17th. So you have 2 more days to procrastinate. Because really, if you don't have it by the 15th, there's more going on than just that. Okay? If you know you're not going to have it ready by April, really file an extension. Get that out of the way, because you just don't want that pressure. If your tax return is that complicated that you can't get it done, I strongly suggest you file an extension end of March, first part of April. And most people know by the end of February. Really, in all my years of doing this, most people know by the end of February if you're going to be able to pull that thing together or not. A lot of times, for most people, they can't pull it together because they're waiting for other documents. Typically, it's a K-1 that you're waiting for, or your documents got corrected because they had some mistakes. But most people know, if you know really mid-March, end of March, that it's just not going to happen, just file that extension, and that way you're not going to be pressured. So tax filing deadline day today is midnight, Tuesday, April 17th. Why is that, Todd? Because April 15th falls on a Sunday. Monday, so it's the next day, Monday, April 16th is Emancipation Day in Washington, D.C. Washington, D.C. is closed April 16th. Yeah, the whole state the whole district is closed. Yeah, there's yellow tape across the highway. You can't get in. Yeah, the whole thing is closed. Nothing happens there. The federal government's closed, and if the federal government's closed, everything's closed. April 16th. So it's April 17th is the first day of that. Now, partnerships and S corporations, your filing date was moved up. It's March 15th this year. So if you have a partnership, those of you know who you are. Last year there was a lot of confusion about this. I told the story last year, a large CPA firm that I had to call because one of my clients had some documents there I needed. And I called them and I said, I need these documents so I can file their partnership tax return. It's due at the end of the week, which was March 15th. She said, no, it's not. It's due April 15th. I said, oh, no, it's not. She said, when did that happen? I said, it happened in the new law. They didn't even know it. And they were a large firm. Or let me say it this way. This employee I was talking to didn't know it, and she was a CPA. It caught a lot of people off guard. And what happened is this year, if you got a failure to file penalty for filing your tax return late because you were a partnership and you didn't know last year and you filed it late, you filed it by April 15th, but you filed it late, they're actually waiving that penalty. There's a form you can fill out and request a penalty waiver, or you can call them and they will waive that penalty. And if it's a large partnership with a lot of partners, that penalty could be pretty big because the penalty is by partner. I have one more break left, right? Yep. Let's go ahead and take that last break right now, Todd. This is Gilbert Talks Taxes, WCAB 590 AM.
I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com. and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. It's official. I'm celebrating another year of looking fabulous, all because of RSL Salon. Whether it's a hairstyle, a manicure, or a pedicure, call Robin at 289-9110 because everyone deserves to look fabulous. That's 289-9110.
That we are back. That is true. Everyone deserves to look fabulous. This is Gilbert Talks Taxes, WCAB 590 AM. You can call me 828-289-9300. Better yet, come by Jesse's Railroad Express there, have a cup of coffee, and ask me any tax questions you may want to ask me. Now, I really want to talk about the security thing because people are getting hacked. A lot of you are going to go to tax preparers this year. The IRS is saying that 70-something% are going to use professional software. Are going to go to a professional somewhere or another, where you do it online through the website, through a website, or you go to a professional who will fill this out for you. Please guard your data. Be careful who you give your data to. If the person preparing your tax return is a neighbor or a friend or a girlfriend of a friend, and she just happens to have her laptop and she's going to do your tax return, just realize that you are putting all your information on that person's laptop. And where is that laptop going to be in a week or a month? And that information is there on that hard drive forever. Oh, it's cloud-based. No, it's not. Okay, it's on that machine. And the how do they safeguard your security? Ask your preparer. And if they look at you and give you that rabbit in a headlights look and don't have an answer, really consider going somewhere else. Oh, it'll be okay. They're just, it's Betty. She's been doing my taxes for 20 years. Well, that's who's getting hacked. That's who's getting their information stolen. The Bettys, who don't have firewalls, they don't have adequate virus protection. Free antivirus is not adequate virus protection, not for a business. She has no firewalls in place. Her computer is basically wide open, and anybody can hack her stuff. It's happening. This isn't just, it might happen. No, it is happening right now. And most of it is people going on the internet and clicking on links and downloading stuff. Ask your tax preparer, do you have a policy in place to protect my data? Is that policy in writing? Do you have an official statement? Do you have a procedure of what you're going to do if your data gets hacked? Do you have insurance against your data getting hacked? My errors and omissions insurance covers me up to $1 million. We pay a lot of money for this stuff because it's serious. Does your tax preparer even have errors and omissions insurance? Please ask these questions. I mean, do they even have security at their office? Do they even have an alarm? What's to prevent somebody from breaking into their office and stealing their computers? And what happens if these computers get stolen? And what happens? I mean, the scenarios go on and on and on, but nobody's asking the questions. I mean, I see it. They come to my office. We went to file a tax return. It came back that the tax return had already been filed using my Social Security number. How did that happen? Well, I'd start with the person that was filing your tax returns for you. So again, security, please, let's take it serious. Let's talk about this tax law. There is something called Section 199A. If you operate a trade or a business and you make too much money, well, who's making too much money? If you make money in your business, okay, if you run a business or a trade, there is a 20% tax deduction for you. Now, there are some things in there that you need to know, but this is new to this tax law. A 20% tax deduction. It's called Section 199A. To qualify for this, you must be, and I'm trying to say it without a bunch of, because the language on it can get pretty crazy, and a lot of people are confused by this. But you have to have qualified business income, okay? You must be a sole proprietor. You must be an S Corp. You must be a partnership. Now, you can be a single member LLC to qualify to get this 20% deduction. And this is a real deduction with no strings attached other than you just have to qualify for the full deduction. Now, to qualify for the full 20% deduction under new tax code section 199A, when you operate a business, you're capped. You have to make the business, and that's the qualified income from the business, has to be less than $315,000 if you're married filing a joint return, or $157,500 if you're a single taxpayer. Now, if you make more than that amount of money, there is a phase-out provision between $315,000 and $415,000. So they're going to prorate the phase-out between that $100,000. Now, there's a lot about this that we still don't know, because a lot of it's going to have to play, and we're waiting for some guidance from the IRS on how this is going to play out. But one of the things I want to leave you with today is you may want to have this conversation with your tax preparer. My people, I will be reaching out to you about this and talking to you sooner versus later, because the sooner we do this, the better. I want to look and see if you're a sole proprietor and you do not have payroll. You're just a sole proprietor, you have a couple of workers, you 1099 them, or you strictly do contract labor, subcontract labor for what you're doing, and you're not paying anybody. We may want to have a conversation about incorporating you, making you an LLC, and then making that LLC an S Corp. Because the procedure is you incorporate and then you request S Corp status to have that status. The numbers we're crunching and the way we're looking at it is, if you currently file a Schedule C, you're a sole proprietor and you file Schedule C, typically it's because you get 1099s. You're a contractor of some kind and you get 1099s, you're self-employed, or you're a single member LLC, which a single member LLC files Schedule C, or you do business as a proprietor. You can qualify for the 20% tax break, but you got to do a few things. If your taxable income is too high and you don't have payroll and you don't own depreciable property, you could find yourself not qualifying for this 20%. And I want you to get this 20% tax deduction. This is real money. This is 20% off your tax bill. Real money if you're paying a lot of taxes. To qualify for the full 20% deduction, you've got to have, again, less than $315,000. So you have no payroll. What we need to do is make you an LLC, S Corp, and then you write yourself a paycheck. You write yourself a paycheck that's W-2. The numbers we're crunching, and these are just scenarios, to give you an example. One example, you're a sole proprietor. As a sole proprietor, let's say you made $400,000 in proprietorship income. You would have paid around $26,675 in self-employment taxes on $400,000. With S Corp status, you only would have paid $15,300 in FICA and Medicare, because what you do is you pay yourself what's called a reasonable salary. Now, I don't know what a reasonable salary is for your industry. The IRS gives you guidelines. We have that conversation. What do you do? What is reasonable salary for you? Let's just assume reasonable salary for what you do is $100,000 a year. You're a professional building yourself out. $100,000 a year at 2,080 hours a year is just under $50 an hour for self-employment. Okay, that's not bad. That's not that much money when you break it down to what you're making. So you're likely going to also pay about another $500 in unemployment taxes on that. But we write you a check. You're now on payroll. You get a steady check. That scenario right there, $100,000 salary, FICA, Medicare, unemployment, you would save about $10,800 in taxes. That's real money that you're going to save. And I got that from $26,671 that you would have paid minus the $15,800. That's the $15,300 plus the $500. You would save $10,871. Now, these are just numbers that we plugged into a spreadsheet and we came up with. I can show you lots of scenarios, but in all of them, you would be saving money, assuming a $400,000 proprietorship income and assuming a $100,000 salary. Now, as that goes up and down, those two numbers go up and down, the savings goes up and down, okay? And what's important is we still have you under that threshold for you to get that money. Remember that an S Corp, but remember that before the S Corp, so now on top of saving the $10,000, I got 2 minutes left, Todd. Get your hand off that button. I got a minute and 30 seconds. Before that S Corp, you're zero. So, but with a salary of $100,000, you created wages of $100,000. You dropped that business's income from $400,000 to $300,000. So you now are below that $300,000 threshold. Your calculation for the deduction would be $60,000. That's 20% of the qualified $300,000 or $50,000. That is a real deduction on taxes. So your tax savings for the newly created deduction would be $17,500. Okay, now you're still in a 35% tax bracket, but that's okay. So that is a real tax savings on that. That is real money that you're removing there. Somebody in a large orange coat is walking behind me, and I don't know why. Okay, I know that was complicated. I tried to go over that real quick. Give me a call if you have any questions. If you're a sole proprietor, please call me. 828-289-9300. I will be back next week. I'm going to elaborate on this some more because the IRS is telling us more about this literally every day. So I will see you next Saturday from 8 to 9 right here. This is Gilbert Talks Taxes, WCAB 590 AM.
For hours more on their planes, Matt Stein and his wife returning from their honeymoon on a